Terrific. Well, thank you for the introduction and for including Tantalus. Yes, we just recently joined the capital markets or access to capital markets by becoming publicly traded on the venture exchange under the ticker symbol GRID. And so I'll do my best to try to introduce Tantalus in a short form here and look forward to questions. But thank you for including us. So at a very high level, Tantalus has been around for almost 30 years at this point. In addition to myself as president and CEO, we have a few other members of our executive leadership team, all who have public company experience. And we are led at the board level by Laura Formusa as our chair. Laura is among the most accomplished female executives in the North American utility industry. She served as CEO of Hydro One, a pretty large utility up in Canada that many of you may be familiar with. So we're very fortunate to have her leadership and guidance as we continue to try to build our business, transition to the capital markets, and ultimately seek to help electric utilities. In terms of our financing, in conjunction with going public, we had the support of 3 investment banks in our syndicate: Canaccord Genuity, Cormark Securities, and PI Financial. Collectively, they helped us access almost $10 million Canadian to further strengthen the balance sheet and support a number of growth initiatives that we're eager to pursue. In terms of our investor base, we have a number of institutions that are material holders and have existing and new positions in our company. All of our existing investors continue to support the company going into the public markets. All capital raised was primary capital to the balance sheet. And one of the investors up in Canada that many of you may be familiar is Dave Barr and the team at Pender Growth, who's been a longstanding shareholder and investor to the company and a great partner to our management team. In terms of a very brief introduction on sort of who we are and what we do, you'll see the reference to purpose-built and purpose-driven. Everything that we do is tied to supporting a very specific segment of the North American electric utility industry today. That segment is referred to as public power and electric cooperative utilities. So while our chair, Laura Formusa, comes out of Hydro One, we're supporting, as an example, the city of Chatham in Ontario, which owns its own distribution electric grid called Integris. We support a utility in the city of Chattanooga that's actually owned by that city. So very different than investor-owned utilities that are regulated and sometimes more political than anything else. In terms of what we do for those utilities, and I'll dive deeper into this, but there are really 3 components to our solution. The first is building out a proprietary Internet of Things communication network specifically for the utility. Once we deploy our communications network, we then help the utility connect to a variety of different devices with a distributed edge computing platform. The devices that utilities connect to include electric meters, load control switches to turn on and turn off air conditioning, as an example, at a home, distribution automation equipment. Those are devices that are either on utility poles or hanging on electric lines that you may see depending on where you live. And then street lighting infrastructure, which many of the utilities we support are also responsible for managing and upgrading. As we connect devices, we access data, and that data then feeds into a growing library of enterprise software and data analytics that truly help the utility gain visibility into their grid and understand where to make investments and how to prepare for events that unfold with storms. And unfortunately, some things that we've seen recently here in the US, where I'm based today. In terms of issues that are unfolding and why Tantalus is important, why we've accessed the capital markets to scale our business. There are really three key issues that are directly impacting the utilities that all deliver electricity to everyone on this conference call today. And we typically don't think about electricity until the lights are off at the house, which becomes incredibly inconvenient. What we're seeing with utilities is really three things are unfolding. The first is Mother Nature is truly having a dramatic impact on the environment. And we're witnessing storm damage that's really unparalleled over the last 20 years. And whether you believe in climate change or global warming is really irrelevant from our perspective. Fundamentally, the ferocity and the frequency of storms are unfolding at an accelerating rate. And when they do, it's very problematic for electric utilities. I'll give you a personal example of that. While our company is headquartered in Vancouver, I actually live in the New York metropolitan area in Connecticut. We had a storm in August of this past summer. We lost power for 8 days. If you know anything about the New York City metro area in August, it's always hot and there's always humidity. So that becomes very disruptive. Beyond the discomfort in the home, think about 8 days with a 14-year-old daughter whose life seems dependent on TikTok. So not only is it inconvenient from a work perspective and a living perspective, but my wife and I had to manage the expectations of our 14-year-old. And so that leads me to the second issue that utilities are facing today, which is changing consumer behavior. As our world becomes digital, as we rely on iPhones and computers and virtual meetings like today, power is prevalent to making us productive. And so when the power doesn't come on, what that leads is to consumers starting to take matters into their own hand. And so again, personalizing. In conjunction with that 8-day power outage, what have we done? We're looking at a whole home backup generator. We have quotes from 2 providers of battery walls. We've got a quote for rooftop solar. All of those things, once we make those investments, and we will do that, all of those things change the impact and the load profile of our home to the utility. Not only does that compromise their revenue, but it also simultaneously potentially gives the utility a source of supply that they otherwise have never had access to. And so the prevalence of distributed energy resources is becoming significant in the world of electric utilities, particularly as it relates to the distribution grid. The third issue that's really unfolding ties to the aging infrastructure. The grid was designed for a one-way flow of power from a central source of generation, whether that's coal, nuclear, or hydro, down through transmission lines, into substations, which is really where the distribution grid starts and where our focus is. From that substation down to people's homes, buildings, industrial plants, manufacturing facilities. That infrastructure was not designed to support the prevalence of electric vehicles or rooftop solar panels or battery storage, all of which are great for the environment, but very problematic for the utility. And so when you look at these three issues, Mother Nature, how that's changing consumer behavior, and a complicated and very expensive infrastructure that wasn't designed to meet today's expectations or today's world, it's a true problem. So that's where Tantalus comes in. And it also creates a fairly substantial opportunity for our organization. In terms of the utilities that we are pursuing, we target roughly 2,900 utilities across the United States. There are roughly 400 to 500 municipally owned utilities across Canada. And as we think about dollar spend, particularly in light of what just unfolded in Texas a few short weeks ago, where the entire state came to a grinding halt because of a storm and massive inefficiencies between the generation and distribution side of those grids. We're looking at, over the next several years, a $100 billion market opportunity in the United States alone by 2025. Substantial opportunity for us. Incremental to the dollars that are expected to be spent. There was an interesting study recently this year by Accenture of US electric utility executives. And in that study, it found that 90% of decision makers at utilities across the entire footprint of the United States acknowledge that it is time to begin upgrading the grid. If we think about what that means for utilities, and we think about the grid investment that's required, I'll give you a parallel. Think about building the internet with Morse code. That's the equivalent of what's unfolding with the utility today. They're trying to build a comprehensive network that can support a multitude of new applications, access a significant amount of data, and they're effectively using what was designed 100 years ago. Creates great opportunity. And so how do we help utilities make this transformation from the legacy grid, from what the equivalent of Morse code is, to something that's truly transformational? As you become familiar with our business, we really have two reporting segments from a revenue perspective. The first is devices. The devices help us deploy a communications network on behalf of the utility and then connect to devices. Excuse me while I use my mouse for a second, but this green device in the middle is the guts of an iPhone. We have intellectual property around this communications module that we build and design for utilities. It is a Linux-based edge computing platform that has both RAM and flash memory, multiple processors to access and parallel process data, a custom ASIC chip, and some backup battery storage. This device gets integrated under electric meters, which is really the historical basis of our business. But as we scale, this same Linux-based computing platform can also be integrated into distribution automation equipment, which you're seeing on the bottom here, load control switches to actually turn on and turn off and automate appliances on behalf of the utility, and lighting infrastructure. The goal of our hardware is to first and foremost lock ourselves into an incredibly long relationship with the utility and then access data. The data then feeds into a comprehensive suite of software, both in terms of user interface and day-to-day operations, as well as a growing opportunity for us around predictive analytics as we mine that data. The combination of our communications network, our devices, and our software ultimately will help utilities prepare for the future. As we think about what that software looks like, every day, 185 utilities across North America today log into a KPI dashboard with our software. This is configurable, it's role-based, it requires multiple forms of authentication for security, and it helps the utility first and foremost determine, are they going to have a good day or a bad day? A good day is effectively clicking through the dashboard and finding out how many meters are working, how many meters are not working, how many homes are having power, how many homes don't. Instead of waiting on a phone call from a customer to complain, the utilities will know that before they even have their first cup of coffee. As we drill that through, our software enables the utility to access granular data account by account. And what you're looking at is a screenshot of our user interface that's used by customer service reps by utilities to evaluate what's unfolding at the home. From an operational perspective, this even goes a step further when we think about power quality. What we're able to do is extrapolate voltage, delivered kW. We can triangulate that based on weather forecasts and weather patterns to truly help the utility predict what's going to happen. And as we think about that prediction, we've recently launched our first data analytics tool, which will drive SaaS revenue for the organization as we scale. Our first focus is on power quality, and based on power quality, helping utility pinpoint not only the location, but more importantly, the cause of outages. We can help pinpoint where they need to roll trucks to trim trees, where they need to upgrade pole top transformers, where they need to work on the insulation of feeders and circuits that deliver power to all of our homes today. It's incredibly powerful, and it's all tied to mining the data. In terms of a couple stats for you, we've got commercial scale. We're at 185 utilities today. We typically are locking into a 15-year agreement or a 15-year relationship with the utility. Once we get a utility, we're able to retain 99% of the utilities through our company's history over the last 30 years. So once we get in the door, we do a very good job of staying there. That's led to some financial success for us. We've just delivered our fourth consecutive year of positive EBITDA, and 30% of our revenue today comes from software and services. As we think about scaling the business, one of the things that gets us excited the most is the fact that we're accessing 30 billion data points a year from the utilities we support today. And that analytics tool that I just referenced is just starting to scratch the surface of what we can do with true data analytics to drive recurring revenue on a per meter, per year basis moving forward. In terms of the revenue profile, we have revenue from both hardware, the connected devices, professional services, and software. The revenue profile is not just upfront when we're installing equipment. Quite the contrary. That upfront equipment, which we make good margin on and can drive cash flow on to support growth initiatives, then locks us into a multi-year relationship where we're driving professional services through annual maintenance contracts of the system that's deployed, as well as recurring revenue on software licenses and data analytics. Today, we generate about $4 per meter per year deployed. Of the 185 utilities, we have roughly 3 million meters and endpoints connected today. So it translates into a little over $12 million USD of recurring revenue that we're driving out of our customer base today. As we look to the future and leveraging both additional capital on our balance sheet and the currency in our stock, we really have a three-pronged growth strategy to deliver sustainable, profitable growth for our shareholders. The first ties to just continuing to build the base of our business. Each year, we add roughly 20 new utilities to our user community. On a compounded annual growth rate, our business, our number of users, our utilities have grown by just under 20% each year for the last 20 years. So we've got a good history here and a track record of understanding how to build solutions that meet the needs of utilities and then scaling. As we scale that base, we connect to more devices. And so what you're looking in the middle column here, or the middle section, is organic R&D initiatives to expand our solutions and continue to monetize the data we're collecting. A couple key things to highlight for you in terms of what we're doing organically today, and some recent press releases that we've shared over the last few weeks, is tied to the delivery of the first data analytics tool for our company, focused on momentary outages. The second is a new next generation solution to leverage fiber, which utilities are getting significant dollars here in the United States to actually connect to homes, not only to improve the delivery of power, but also create a new revenue stream for the utility by delivering broadband to mitigate the digital divide that we're witnessing in smaller rural communities in Canada and the United States today. As we think about further growth and truly accelerating the business, there are identified acquisitions for us that or existing partners and some identified opportunities to accelerate the growth of our business, and where we'll focus our attention in terms of targeting strategic M&A that's accretive to our business is really in three areas. One of which is to leverage the existing capabilities that we're deploying to the utility and help them not only automate the electric distribution grid, but also automate other smart city applications like lighting control, as an example. A second big area of focus is going to be enhancing the software packages and the software capabilities today to drive more recurring revenue through our SaaS model around consumer engagement and power quality. The third area of growth is going beyond North America, which is really where we're focused today between Canada, the US, and the Caribbean Basin. I've mentioned fiber to the home and our new analytics tool, both of which we believe are the basis of putting Tantalus at the forefront of helping utilities integrate and prepare for the adoption of electric vehicles, solar panels, smarter appliances, battery walls. And the analytics tool is something we're very excited to drive incremental software revenue for our business. Historical financials are available on our website and have been disclosed and provided to CDAR. We are on the cusp of delivering our 2020 audit in a few weeks in conjunction with transitioning to the public markets. I'll note that we do report in US dollars today, and we've just recently migrated from US GAAP to IFRS. Our gross margins been pretty steady for the past several years and blend between the mid to upper 40s. 2020 will be among the best performing years we've had in terms of gross margin contribution. We continue to see growth of our EBITDA margin, and we have a target of ultimately scaling the business through operating leverage to deliver a target of 15% EBITDA contribution margin over the coming years. We provided some guidance on Q4, but we'll be excited to share the results of the full year in the next couple of weeks. And with that, we think we create a pretty compelling investment thesis within the ESG sector, both in terms of a substantial opportunity, given the amount of spend that is expected to upgrade the distribution grid, the fact that we have a proven technology that's being deployed at 185 utilities today. We've got defined growth initiatives to scale our business moving forward. And we've got a team that's been in place now for several years together that's got a pretty good track record on executing. So with that, Tina, thanks for the time and the inclusion. And I'd open it up for Q&A.
Thanks, Peter. That was great. Interesting to hear kind of the SaaS side of the story in a little bit more detail. Earlier in the presentation, you mentioned how disruptive power outages can be, especially with so many people working from home. What are some of the unique advantages that Tantalus has in helping these utilities upgrade so they can avoid costly disruptions for their end consumers?
Yeah, so Tina, it all ties to the collection of data through the devices that we've deployed in the field, and then analyzing that data through our software tools. And so a couple of specific things that we can do. We can pinpoint where utilities have trees or limbs hitting power lines. We can see that. It's actually, every time a tree hits a power line, it creates what's called a blink. A blink for you and me is legitimately a blink of the lights in our homes. That's not just a light bulb that's about to go. In many circumstances, it's actually tied to a power quality issue on the lines feeding our homes or buildings. And so we can help utilities with data pinpoint where tree limbs are hitting power lines such that they can roll trucks, cut back those trees without knocking the entire tree down, or in my area, a war on trees after the recent storm, but actually prune the trees appropriately and efficiently. That's one thing that we can do. The second thing that we can do is help utilities understand where they have stress at a substation. And what I mean by that is overloading capacity, meaning that homes may have been developed or homes may have been expanded or new applications may have been installed at the home that the utility really didn't have visibility into. And so as we think about storm damage, right, Mother Nature is going to arrive and she's going to be angry on occasion and she'll have impact. We can't stop Mother Nature. What we can do is make sure that the utility is making sure their circuits and their feeders and their pole top transformers are operating as efficiently as possible. And then when an outage actually occurs, pinpointing where the outages have unfolded, and based on data from the actual point where the outage happened, figure out what equipment they need to roll the truck to the exact right location with the equipment that's required to get that area of their distribution grid restored as quickly as possible. So it's really visualization of data based on that data, some analytics, helping the utility proactively take some action in anticipation of a storm, and then during and after the storm, pinpointing precisely where the outages have occurred with visibility as to why.
Right. Yeah, I mean, I think the software and the analytics is obviously extremely important and valuable to your customers. We got a question from the audience that I think is pretty interesting. What are the utilities' alternatives to deploying your solution now, and what's the cost of the alternative solution for the provider?
Yeah, it's the second piece of that question is the viral question I ask general managers and CEOs of utilities all the time. What's the cost of doing nothing? Because that's today, there are some other companies, don't get me wrong, and we're in a competitive environment with some of the largest meter manufacturers in the world. So there are competing alternatives for a utility to select. In terms of outside of selecting and investing in technology to automate their metering infrastructure, to deploy a communications network, the utility is really, no pun intended, in the dark from the substation to the home. And we still see it. We see it here in the US, we see it in Canada, and certainly in the Caribbean basin. Some utilities just choose to do nothing. And unfortunately, when that happens, they're typically fine until there's an event. And then when there's an event, politicians get involved. For our market segment, it's mayors and city council. Right? People lose their jobs. And so what we've seen is certainly over the last several years, I'm not aware of really too many utilities, at least in the US, that are sitting idle. Many utilities have still not yet upgraded and invested in technology, which creates great opportunity for us. But there aren't too many utilities that are sort of sticking their head in the sand at this point. And I think not to highlight or try to monetize on human suffering in Texas, Texas was eye-opening for utilities across North America. The imbalance between supply and demand, and don't get me wrong, the positive investments Texas made on distributed energy resources and wind and solar, all great, terrific for the environment. The real problem in Texas, in my opinion, was the lack of investment and the lack of automation in the distribution grid to help mitigate that imbalance of supply and demand, all of which we can do through software.
So I'll just ask one last question on that note. Obviously, with these utilities are seeing challenges, are there any utility companies that are developing their own solutions internally?
Not that we're aware of in terms of true automation of devices and communication networks. I think that'd be very expensive and time consuming and way outside of the business model of utilities. Where we have seen some utilities get creative, and we've partnered actually with some of our existing customers, is as we can access data for them, some utilities have started to build their own algorithms or some of their own analytics tools that they're really using internally. We've seen that on voltage control a little bit, and not going too far into the weeds. Voltage can be controlled between 100 and 120 watts, and utilities can play with the current. So there are a couple parameters that the utility can adjust, and we've seen a few utilities build their own algorithm. In some circumstances, we're talking to those utilities about coordinating with them and helping commercialize what they've built for themselves, but sharing that with other utilities in their region. And I think it creates a great public-private partnership, particularly with the utilities we support in terms of the public power and electric co-ops.
That's great. Well, thanks for the presentation, and obviously you have a fantastic track record of retention with your customers as well. So I think it sounds like you'll be able to capitalize on that and grow the SaaS platform pretty quickly. Yeah,
it's an exciting time for us, and we're pleased to be on the Venture Exchange today under Grid, and thank you for the inclusion in today's discussion.